What's up, traders? Heading into this week, we've got a market that tried to break all-time highs, got rejected, and now we're in that sweet spot where the next 3-5 sessions can give us clean directional trades if we stay disciplined. If you like tight, actionable levels and clean trading plans, hit like and subscribe. And I'll link last Sunday's video in the description with the bigger picture levels so you can pair it with today's update. Quick macro checkpoint. This is a data-driven week, and that matters because data will move rate expectations, which moves index futures, which moves everything we trade. So if we get a big CPI job surprise, expect faster moves and more fakeouts. Also, we've got triple witching late week, which can create weird end-of-week price action, big intraday swings, fast reversals, and why did that level just fail moments. So trade the chart, respect the calendar, and manage risk tighter. All right, let's go stock by stock. I'm going to keep these tight, tradable, and level-driven. The SPY first. We made multiple attempts at the all-time high around 689, and we got rejected 3 times, which matches what I said last Sunday. We likely needed a pullback to flush out weak hands and bring in fresh buyers. The key pullback zone I'm watching is still 674 to 675. That October-November breakdown level that's been acting like a magnet for support and resistance. Friday's breakdown looked intense, but internals didn't scream panic. It felt more like bulls ran out of steam and sellers just took the wheel. Near term, 679.50 is the first real decision point. It acted as support, and we closed near the base of the most recent consolidation range. That makes me think this is still a healthy pullback, but the overshoot suggests we could get another test lower. My plan: bearish trigger. Break under 679.50, reject on the retest. I'll look for shorts down into 675, and I'm hunting longs at 675. That's where the 20-50-day averages and real support should live. Bullish trigger, reclaim 684.50, possible long back to 689. Highest probability upside is over 689, break plus retest, then continuation higher. QQQ's been a step behind SPY structurally, but it got to the key pullback area first, 611.50 to 603. That zone matters because the 20 and 50-day are sitting right there, and we saw support into Friday's close. But Friday's candle structure makes me lean that we might still get more downside, so my next focal point is 606. Clean plan. If we break under 611.50, reject the retest at the moving averages. Shorts to 606. Simple. If we hold 612-ish and chop up towards 618.50, I'm cautious. Balance ranges can break either way and chew you up. I want a real bottoming signal. Double bottom or an inverted head and shoulders. Something that shows buyers are actually stepping in. Upside trigger. Reclaim 618.50 with a break plus retest. Potential push towards 626. Bigger upside, over 630. That's the trend flips back to up signal, and then 630. 637 is straightforward. Quick question. Are you more focused this week on index trades, SPY QQQ, or single name momentum? Drop index or singles in the comments. NVDA, honestly, it's become a beaten down version of itself lately, and clean day trades have been tougher. We're back near the midpoint of that range going back to July, so excitement is limited unless we get a real catalyst. Right now, we're sitting near 175 support, and Thursday, Friday wiped out the bullish attempt earlier in the week. 2 downside trade ideas: relief rally to 177.50, short back to 175, and if that breaks, continuation to 171. Or the cleaner one, break below 175, reject on the retest, short to 171. But zooming out, if this continues weak over time, I'm watching the bigger downside magnet near 160, fills the gap, and the 200-day can meet price there. That's where I start getting interested in building longs. Upside level that matters, 184.75. If we reclaim that, it's a clean retrace setup back toward 196. Apple looks fantastic. Higher highs, higher lows, clean trend since the breakout around 240. The key support is 276.50, and Friday was important. While the market and tech sold off, Apple printed more of an indecision doji, meaning buyers were present and defended that zone. My plan, as long as we hold 276, I'm looking for a break over 279.50 to target 287. If we dip under 275, I still don't love shorts. Apple's strength is real, and the area below can be noisy. For me, longs are the game as long as 276 holds and we can reclaim 279.50. In Microsoft, full transparency. I've been adding long-term at 468 and a bit more at 476, so I have long bias. For day trading, Microsoft is in a balance range. Friday was an inside bar indecision, which means the break is the trade. Two paths: break below 476, quick short down to 468. It's trickier because the 200-day is rising, but there's room. Hold 476, reclaim 484, push toward 493. And if we break over 493, that sets up the bigger move. Potential to 5 and 12 as the double bottom confirms. Amazon has been a great trader lately. Zooming out, we had a lower high on December 2nd, confirming the downtrend, and the rejection near 232 looks like another lower high. This is shaping like a descending triangle, so the levels are clean. If we hold below 227 and reject there, short down to 216.50. Confluence is strong because the 200-day is in that area. Bull case, reclaim 227 quickly, starts looking like a double bottom. Break the neckline at 232.75 and you've got a long to 238.75 and the trend neutralizes. I'm still long bias on Google. Last Sunday we were building a bull flag, watching hold over 310 in the breakout, and Thursday, Friday pulled it back with broader AI sentiment hitting the space. But the flag is still in play. Bull trigger, break the flag trend line, and reclaim 318. First target 327, then you're back in new highs territory. One caution: the longer a flag builds, the more overhead supply can stack up. If we get a deeper pullback, the weekly support I'm watching is 291.65, and if we tag that, I'm scouting long entries aggressively. Tesla has me a bit giddy, not gonna lie. On the weekly, it looks like a massive cup and handle forming. If it confirms, that's the kind of pattern that can launch to completely insane levels. Daily chart, 441 has been a major level, and the pullback held the 50-day and respected that zone. Friday was impressive. Tesla pushed through 456 and held over it while the broad market pulled back. That's strength. My plan, hold over 456. Longs to 471 are clean. If we break under 456 and consolidate between 441 and 456, that's basically flag building, and the 456 breakout comes back into play. And the big level, 471. I'm not front running it. That's how traders get smoked. But if we break and confirm over 471, that's the real expansion trade. Also, Tesla is not beginner friendly. Position size with great caution. Palantir is showing relative strength again. After that earlier breakdown, the last 3 to 4 weeks have looked constructive. The daily is trying to form a bull flag. Friday pulled back and supported off the 50-day and the 179 level. If we break out over 187, longs to 195 look great. If we chop between 179 and 187, I'm okay with it. Tightening under resistance usually sets up the break, and fundamentally, it's got a tailwind from that US Navy contract earlier in the week, so sentiment can stay supportive. AMD has shifted bearish again. It would have looked better if it reclaimed 226, but Thursday, Friday showed weakness under 214, and Friday closed cleanly below it. My plan, if we open under 214 and reject or break under 210, I'm looking for shorts to 203 and possibly the prior lows near 196.75. The rejections near 226 look like a lower high, and the rounding action is a warning sign. The only thing that flips the script is a decisive reclaim over 226, but even then, you've got the 50-day overhead, so I'm not chasing longs right now. Robinhood has been weak on the bigger trend, clean lower highs and lower lows, but it's getting more indecisive at current levels. We were watching for a break over 137 to neutralize the trend, then downgrades hit and we got a sharp sell-off Thursday and more downside Friday. Shout out to Readness 4840. If you held those puts and hit your target, that's a solid trade. My plan from here, bullish path, find footing and consolidate over 120 to form a higher low and build an upside breakout point. Bearish path, reject 120.50, target 113.75. If we break under 113.75, then the equal low target is around 103.75. And if we ever get back near 103, I'd actually be interested in building longer term exposure. That's where the 200-day becomes the magnet and reversals can get real. That's the game plan for the week. Stay level driven, let the market come to your zones, and don't force trades in the chop. If this helped, like and subscribe and go watch the last Sunday levels video. It'll make these setups even cleaner. Gen W, we're building wealth the smart way. See you in the next one.